Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 13th, 2026, and we're diving into the first quarter earnings report of Phoenix Education Partners, the parent company of the University of Phoenix. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. I'm excited to discuss Phoenix Education Partners' latest financial performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Phoenix Education Partners reported a net revenue of $262 million for the first quarter of 2026, up from $254.7 million in the same quarter last year. John, what does this tell us about the company's performance?
This revenue growth indicates strong retention and enrollment at the University of Phoenix. The company is effectively catering to working adults with career-relevant programs, which is reflected in their increased average total degreed enrollment.
And how about their profitability?
Despite a decrease in net income to $15.5 million, the adjusted earnings per share came in at $1.38, surpassing the forecast of $1.27. This suggests that the company is managing its costs well, particularly in light of the expenses related to their recent IPO.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Phoenix Education Partners reported an adjusted EBITDA of $75.2 million. How significant is this?
This is quite significant, as it reflects a margin expansion to 28.7%. The company is clearly optimizing its operations, which is crucial for sustaining profitability, especially after their IPO.
Looking ahead, what can we expect from Phoenix Education Partners?
The company has provided a revenue guidance of $1,025 million to $1,035 million for fiscal year 2026. With a strong cash position of $218.1 million and a new $100 million credit facility, they are well positioned to invest in growth initiatives and enhance their educational offerings.
Strategic initiatives and market position. John, Phoenix Education Partners recently completed an IPO. How has this impacted their financials?
The IPO has led to increased share-based compensation expenses, which impacted net income. However, it also positions the company for future growth by enhancing their market presence and financial flexibility.
And what about their strategic focus?
The CEO, Chris Lynne, emphasized their mission to provide career-relevant education for working adults. This focus is driving enrollment growth, with 85,600 students enrolled, and supports their strategy of deepening employer alliances and enhancing student outcomes.
Key takeaways. In summary, Phoenix Education Partners has delivered a solid first quarter with revenue growth and an adjusted EPS that beat expectations. Their strategic initiatives and strong financial position suggest promising prospects for the future. John, any final thoughts?
Phoenix Education Partners is on a positive trajectory, leveraging their IPO to strengthen their market position and enhance their educational offerings. Investors should keep an eye on their continued enrollment growth and strategic partnerships.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Phoenix Education Partners' performance in the comments below.